Hi, I'm Jay Freeborn at Washington Tax Services, and Washington Tax Services has been in business for 28 years here in 2017, and we pride ourselves on kind of dispelling the myths in tax resolution and tax relief, informing our clients and loading them with information so they can make a decision about how to resolve their tax problem without making it like finding a unicorn. In any case, I wanted to illustrate 8 examples of offer and compromises that we've done in this office. Some of them were cases that we did not do an offer and compromise, so you could better understand the rule changes which occurred in 2012 that are still affecting us today. And I'm going to demonstrate the offer and compromise in 2 basic parts. First, the asset test and the disposable income test, and then I'm going to illustrate the 8 examples. So come join me. So this offer and compromise tutorial today is mostly about the income and your disposable income, being able to pay back what you owe before your debt expires. But it is important to review the asset test because assets do play a factor and they can often immediately eliminate you from qualifying for an offer and compromise. Obviously, if you owe the IRS $50,000 and you have $1 million, well, pay what you owe the IRS. In any case, these are some quick little cheat sheet on the valuation of your assets when you're examining to see if you qualify for an offer, in addition to the income test. Multiply the house by value by 80%, subtract your mortgage, that's in play. Your cash and bank accounts, you have an immediate $1,000 exemption, and then they allow you to exempt up to what it costs for you to run your household for a month. If that's $5,000, then that's exempt too. Cars are excluded. The value of cars is $3,450. Obviously, if you have a loan against a car, you might not have any equity, but you do get a $3,450 exclusion. Household goods are exempt, $6,250. That's the stuff in your house, heirlooms, what have you. $6,250 is exempt. Stocks, IRAs, life insurance with cash value all have slight exemptions, what it costs to liquidate them, etc. But the asset test might be looked at first when you're determining if you qualify for an offer, because if you have assets to pay the IRS, then you might not qualify, and it might not be worth your time to go through the extensive analysis on income. I should also add, though, sometimes people with home equity can still qualify for an offer if they meet the income test, if they can demonstrate they can't borrow against the equity. All right. All right, folks, the key, as we know, on the income is, can you pay back the IRS before the debts expire? And of course, the caveat is, can you pay back what you owe the IRS after your allowable expenses are factored in, subtracted from your income? So let's just do a basic review. You got your gross income. This is how you determine your disposable income. You got a national standard for your family, food and clothing. National standards are pretty well documented on the IRS website. You got a housing standard for the county that you live in, again, found at the IRS website. The asterisks indicate there's a standard for these. You have an allowable amount for car payments and for transportation, depending on where you live. Your taxes, your current taxes are basically, there's no limit. If you live in a high tax area, you get the full amount. Daycare, full amount within reason. Out-of-pocket medical is capped unless you really have medical issues or you're older. There's a higher cap for older. Your medical premiums are pretty much fully allowed. Child support, alimony, fully allowed. Any judgments you might be paying on with a bank, a debt, those are allowed if they're court-ordered. Anything you're paying back the state that you live in on back taxes is allowed, but not the full amount. A percentage is. So if you do owe the state, we often look at our customer getting in a payment plan to make their offer and compromise possibly more doable. And federally backed student loans are always allowed. where you'll arrive at your total expenses, your income minus your allowable expenses equals your disposable income. So when we go back to can you pay back what you owe the IRS before the debt expires, that's based on your allowable disposable income, not your actual. All right, that's disposable income. Here's our first example of an offer in compromise using the 2012 rules. Client owes $156,000. His last year owed, which is most important, is 2014. The old years don't matter as much. And what you need to know is, when does your last year expire? In this case, it's May of 2025, which is about when they process his tax return. Now, looking at today, which is the end of October of 2017, that last year will expire in 90 months. So the math is 156,000 divided by 90 months equals 1,733. If your monthly disposable income is less than 1,733, then you might be a candidate for an offer. If it's over, you're not an offer. Now, of course, the final test is the asset test. Your house is worth 80% minus the mortgage. You have exemptions of most of the money in your bank account to get by. Your cars are exempt, your household goods are exempt. Now, stocks, bonds, IRS play a role. But strictly by income, this is the formula. For this client, their disposable income was $5,000 a month, so they did not meet the offer test. So this second offer is a little bit of a trick offer. In fact, the offer I'm about to show you would have been the same after the rule changes as before. But I just wanted to illustrate it as an example. Client owes $58,000. Most recent year is 2015. That debt will expire in May of 2026, 10 years after his tax return was processed. That's 102 months from now. 58,000 divided by 102 months is $569. If his monthly disposable income is less than $569 a month and he meets the asset test, then he qualifies for an offer. Well, this gentleman's on Social Security only. That pays all of his living expenses. He has no disposable income, so he qualifies for an offer because 0 is less than 569. Now, you multiply that disposable income by 12 months. In this case, you're multiplying nothing by 12 months. So if this guy meets the asset test and has no assets to give, he, in theory, could be an offer in compromise of $100. This third offer example that I'm showing you is a successful offer that we processed this week. After several months, the IRS agreed to it this week. Client owes $112,000. Last year owed 2015. May of 2026 final date. 102 months left in the before the debt expires. 112,000 divided by 102 is 1122. And this customer's disposable income was $462 a month. And multiply that by 12, you got $55.44. I can tell you that today his offer in compromise was accepted for $6,700. He had already paid the 20%, so he was on the hook for the remaining balance over the next 5 months. That client clearly benefited from this law change. Before 2012, he would have multiplied that 462 by 48 months and would have paid a lot more in his offer in compromise. So it was nice to see him benefit from that. Alrighty, this fourth example is someone that we found out did not qualify for an offer in compromise, not to ruin the suspense. He has $142,000 through 2016. 2016 is going to expire in May of 2027, or about 114, 115 months from now. He would need disposable income 142,000 divided by 114 months, or $1,224 a month. He'll have to have less than $1,224 of disposable income to qualify for an offer. This guy's got $3,700, and in actuality, he has zero, but he's way over the standards, as we had demonstrated earlier in this video. And he also has $60,000 of assets. So all we can do for this gentleman is to get him the lowest agreement that we can, and just to band-aid the case so he can try to grow his business and perhaps grow his business out of this tax problem, which is, if you don't qualify for an offer, that's sometimes your best hope. If your debts aren't going to expire in a while, and as you know, he's got a long way before May of 2027 here in 2017. Well, this case is somebody who's actually an accountant. Yes, accountants actually have tax problems. In case, he owes $230,000. He actually did owe in 2016. Again, he's owed for many years in a row. I'm going to comment about that at the end of this clip. His debts can expire in May 2027. 114 months again is the last case. Do the math. $230,000 divided by 114 months, $2,023 a month. His disposable income is $3,800. He doesn't meet the criteria for an offer. On a good note, he does have a lot of old debts that are going to expire. So sometimes when you're in an installment agreement, debts expire. So that's one positive about it being an installment agreement. But if you are a business or somebody or a person who continues to owe money, that hurts your chances of being an offer, because you want to reduce the amount of months here. In his case, he owed like maybe $1,000 for 2016, which unnecessarily extended his statute 12 months. So if you're in the long term, if you're trying to qualify for an offer, definitely see if you can pay your current taxes. It will make you qualify for an offer potentially in the future. So that's the lesson of this case. All right, case number 6, offer and compromise. We have submitted on these folks. $94,000 owed. 2012 is the last year they owe. That debt's going to expire in May of 2023. 81 months left. $94,000 divided by 81 is about $1,100 a month, and their disposable income is $548 a month. So they meet the test. Multiply 548 times 12, add in whatever the assets are minus the exemptions, you got an offer. These folks offer, this family's offer is being processed. I know right now that they're just trying to figure out the income. That's one of the pitfalls of doing offers. People's incomes and lives change in the middle of an offer. And so we're defending them. And in case this is an example of a good offer and compromise case, the folks are not able to pay the debt off before the debt expires. They meet the criteria. So this 7th example is a big dollar ower, $1.1 million. This client owes the tax from embezzlement. So if you're ever thinking about starting a career of crime, if you do embezzle money and prosecute it, they will tax you on it. Anyway, this person, his last year due is 2010. The IRS actually filed that tax return for him. His debt's going to expire in August 2022. That's 70 months out. Now, in 70 months, not many people are going to pay $1.1 million. In fact, his disposable income only needs to be less than $15,242, $1.1 million divided by 7 months to qualify. The guy clearly qualifies, as does 99% of Americans with this problem. So his actual disposable income is about $1,895. Multiply that out by the 12 months. We did an offer of $23,000 for this guy, and the IRS actually a couple months ago accepted his offer for $10,000. So the offer and compromise program is best for large balances on older debts. Really, I mean, that's the sweet spot for offers. Large balance, older debts. But, you know, as we know today, through illustrating these examples, there's a lot of ways to qualify, but this is the classic way to qualify for sure. Our final example today is a customer of ours who owes $164,000. Client's been current on taxes since 2013, which is always good. Helps offer a compromise. It also helps qualified for a penalty abatement because you can demonstrate to the IRS that you're a good taxpayer. This guy's last tax debt is expiring in May of 2024. That's in 90 months. 164 divided by 90 months is 1822. Unfortunately or fortunately, they have $9,000 of monthly disposable income. They're not even close. So we're going to negotiate the most livable installment agreement that we can, so his older debts can expire with him paying the least, and then see if we can get relief from the penalties. This is the 8th and final example today. I hope you found the video informative. If you'd like to dig deeper, give us a call at 1-888-282-4697 or send us an email through the contact page at watax.com. Thanks for watching the video. You made it to the end.